This is Bruce for Spartan Capital Markets, taking a look at this week's weekly technical market report for Sunday, July 9th, 2023. So we start off this week with the euro dollar. Let me just zoom in. And you can see how a few things happening with the euro dollar. Number one, very important, we closed at a 9-month weekly closing high. So this is the highest weekly close in 9 months. This is very bullish, particularly since it follows a breakout of a falling bullish wedge off of some key significant support area. And you see how we tried to drop 1, 2, 3 times, could not do it. Now we have a clear, decisive upside breakout. We should see follow through in the breakout. Short-term pullbacks should be watched for bullish continuation signs, but it looks like the euro dollar has a chance to trend to new highs eventually. What happens next will be critical. We'll be keeping a close eye on it to see if we continue to have bullish momentum in the short term, if it goes into a pullback and consolidation first. Next, we have the pound dollar. And the pound dollar is a little similar, but if you know anything about technical analysis, you could see that the pound dollar is actually, and the evolution of its trend, it's a little bit further along. So in many ways, we can use this as not a benchmark really, but a sample of what we could be doing. If we look at the euro dollar, you could say maybe we're kind of down here in the overall developing pattern. And so we also had a strong follow through in the pound dollar, as we saw in the euro dollar, of course. That's our dollar pairs. And then we had a move off the 34 exponential moving average and this long-term downtrend line. So here we broke out of a long-term trend line. And you see we did it clearly. A long-range bar closed at the high of the day. And then eventually we pull back to test at a support. Resistance becomes support. And so now we can expect a continuation of the uptrend. That is the primary direction, so weakness should be watched for signs of a continuation higher. And then we have the dollar CAD. In the case of the dollar CAD, first we have the weekly chart. So you see we have this upside consolidation over here that held support of the 34, held weekly, in this case the 34 weekly exponential moving average. Support here, support here, support here, choppy here, and then we clearly break through. But what happened here? We were able to draw a very clear trend line. I could actually attach that probably over here, and we'd get 1, 2, 3, 4, 5, 6 levels that we broke when we broke this right here. And that's why you have that sharp sell-off, because it was significant support that got broken. And now what happens? We break support, we retrace back to test it as resistance, and that's what we're doing here for both the trend line, but more significantly the 34 exponential moving average, because you can see how that was almost hit pretty directly on this retracement. And then we have the daily chart here, and you can see the same behavior but a little more detailed. So here we have the trend line support, now resistance. And here we have this was the 34 exponential, but you can see on the daily chart, it lines up with the 200 exponential. So confirmation resistance on the weekly, confirmation resistance on the daily, and we have follow through to show that clearly it is resistance, and the larger pattern is becoming more and more bullish. So once we have a breakthrough support, retrace back, test resistance, and then turn back down, that's a sign that the trend is ready to keep going to the downside. So one other thing on this too is that this is the completion of an ABCD pattern. So this CD leg matches this AB leg right here at this 1.3372, I think that is. So 3 reasons, including the trend line, to identify that as resistance. So that should hold for some period of time. And then we have the dollar yen, and the dollar yen, if you're trading this, you know what happened on Friday. And if you weren't in it and been watching it, I got part of it, but not what I was expecting to get for a variety of reasons. But nevertheless, we have a clear drop, and in a minute we'll also look at the pound yen. So is this a precursor as to what's going to happen with the dollar yen pairs? I'm sorry, not with the yen pairs. So now we have a sharp sell-off, and the yen, we're heading into these, the dollar yen, we're heading in these support zones. So these are the key support zones, especially this uptrend line as well. So bounces, can be expected to hit resistance and then turn back down, and so that we should keep in mind the dominant force at this point, in my opinion, is now down. We broke this uptrend line. We have a clear turn down, and we don't have a turn down in one day. We don't have a sharp reversal, and it just happens in one day and it's over. So we can come all the way down to this bottom line, no problem. And notice that here we have resistance, maybe support. Here we have resistance, maybe support, and so forth. So most of I think these levels right now are the moving average up here and then Fibonacci levels, but we can also add in this down here, which I didn't do. And you can see how momentum is confirmed turned down by the relative strength index. And then we move on to Hathaway analysis, where we look at some geometric analysis from Scott Hathaway, starting with Bitcoin US dollar. And if you're a regular to this newsletter, you know that this is just going to be a brief summary. I'm not going to get into how this is derived too much. It's just too sophisticated. And if you haven't studied it, which is unlikely, you're just not going to understand it. And sometimes it's even a challenge for me. So the key is, what is it telling us? That's easy enough. Okay, the confirmation of why that is where it gets a little more sophisticated. But what it's telling us is simple enough. And so what it's telling us is that we're at a potential support zone, recent lows. That should lead to a bounce, and the initial target is up here at 31,813. However, if we break below the support, then we're probably coming down to the 28,059 zone before we find support and turn back up. If we keep going, then we're looking for support down along this tangent line somewhere, but at a maximum of this 23,437. So it looks like either we're going to, and you can see how if we ascend along according to this curve, then we should ascend relatively quickly off these lows once it starts to happen, because we have to maintain this angle of ascent to not break this tangent line. If we break this tangent line even up here, that's short-term bearish. Of course, we're not going to know what the price is up there, but this gives you kind of a general guide of kind of where we're heading and what the key levels are. Certainly, I'd want to be looking to buy down here at 28, and for sure down here at 23,436 or so. And then finally, we have the pound yen. And the pound yen is in an interesting spot because it hasn't dropped like the dollar yen yet, but it potentially will. And certainly this analysis would also confirm that. We have clear resistance up here based on this tangent line. These two intersections here, this 1/3 rising tangent line and this other tangent line over here, confirms resistance over here. We started to see a sell-off on Friday, but if we're heading down to the 176.74, 73, we have a long way to go still, and we could just be getting started. Also notice that it's possible that if we go forward in time, we may creep a little bit above these highs and still stay below this resistance tangent line here before we drop. However, at this point, it's expected that it'll happen probably this week. So that is it for this week's Market Technical Report. Traders, have a great week.